Chess went up Friday, October 17, 2025 for MarketChess.com. Let's do an afternoon update here in the final hour, which will take us into the weekend. We will consolidate all fresh ideas, actionable ideas across asset classes, educational content to boot in my usual full-length weekend video strategy session for members on Sunday inside Market Chess subscription services. You do not want to miss it. For now, getting a relief rally after what's been an extremely volatile week, going back to last Friday's big sell-off, and then all throughout this week, just alternating gaps up and down, it seemed like, and swinging around all over the place with a chop fest here on the S&P. There is a colorable or viable argument we're topping. Of course, bulls will correctly say back here around Labor Day could have been one as well, and that failed miserably, and we just squeezed higher. So that's the nature of what's been a one-way melt-up kind of market overall. Remember, even with this last week's and going back to last Friday's sell-off, the S&P 500 index still hasn't precisely tested that dark blue line in my chart, which is the 50-day simple moving average, in going back almost 6 months now to late April. That actually, I think, is the third longest streak above the 50-day in the S&P going back to 1990. Going back 35 years, folks. This is the real McCoy in terms of a melt-up market. I know it doesn't seem that way to bulls if you're levered to the hilt call options, near-dated call options, and when you walk in and you chop around like we had this week, it can burn those options into the ground. But the reality is, yes, we're still in the midst of a melt-up, as goofy as that may sound to stay, even though in the very short term we've been kind of flopping around here. It's even more pronounced on the QQQ, ETF at the top 100 stocks on NASDAQ. Again, you go back to July, August, a potential top, which did not come to fruition, and we squeezed up. So that's certainly a possibility. And why is that important? Because next week, speaking of the NASDAQ, we get Netflix. We get Tesla reporting earnings Tuesday and Wednesday, respectively, and that ushers in the very serious part of earnings season. Mega cap tech, look at the Magnificent 7 ETF. It topped out intraday slightly, but intraday back on September 23rd, tried to retake those highs in early October, earlier this month, couldn't do it. So we've been kind of rolling, possibly rolling over, but rolling for now. Again, as we head into the serious part of earnings season. Small caps relative weakness today as I charted. Look at the weekly chart. Look at that candle. Skinny shadow on top means price was there and faded down here to the body. But when you look back, again, this is why we like to look at charts on multiple time frames. You know, just that level just above 240, 243, 245. This has been such significant resistance going back to late 2000, actually before that, but this is late 2021. That was before a pretty strong intermediate term top for a couple quarters. And then, of course, going back to the end of 2024. So this is a big time, not a small time area. And we initially are fading off it after a heck of a run. So we'll see if we get downside follow through. Speaking of downside follow through, guess what actually started to move down today? And that would be gold, that would be silver, that would be the precious miners. Now the issue is it a top or is it the top? I certainly think it's a top. I vehemently disagree it is the top. If you're going to tell me, first of all, if this were a major top in gold and the precious miners and metals and the whole complex, right? I'm talking like a major, some people were saying it's a bubble. You know what would be happening, which is not happening at all? People will be bragging at dinner parties about, hey, I got my Newmont mining. I got my Sibanye Stillwater. It's an absolute stud. They're not doing that. You know what they're saying at dinner parties? I got my Palantir. I got my Nvidia, right? I've had my Apple since Buffett bought it, right? I've had this. I've had that. I've had Alphabet. That's what they're saying. I have my Robinhood stock. I have my, Rigetti, which, a lemonade stand, I think, has more revenue. But that is what I'm getting at, is we're just not at, I think, the top for gold and the miners. I think, yes, we'll have nasty shakeouts along the way, and this probably is one of them. But I think they're just going to wind up setting up to be an actionable buy point. So we'll be talking about all that and many more ideas in my usual weekend video. Again, you do not want to miss it. But for now, again, as the regional banks, and it's a combination today's bounce, I think, of regional banks. You look at the KRE, but we're talking about Jefferies, the investment bank, right? Plus the regional banks, Zion and Western Alliance. They are getting some kind of bounces there. They do not look like bottoming formations. They're low buy volume, what you might call a dead cat bounce. I think there is substantial weekend risk, especially that these bounces could be totally given up come Monday, and Jefferies as well. So I seriously doubt we're out of the woods. You can see the VIX is down today, but still above that kind of 20 demarcation line. Okay, full analysis over the weekend. You can always sign up for a membership at a reasonable price. Thank you much, folks, and enjoy your weekend.